Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ross Kay, home ownership consultant at wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross, and Merry Christmas.
Merry Christmas to you and all the listeners out there, Jim.
Ross, we have some listener questions. Jamie asks, the Canadian Real Estate Association's benchmark home has increased $150,000 so far this year, and I'm wondering when this skyrocketing price rise will run out of fuel.
The benchmark price. The benchmark price. Benchmark price is basically the reason I was forced to leave organized real estate. You can imagine a successful 30-year career selling homes, thousands of families in your local community who've dealt with you, and you realize that organized real estate has turned down a path that was unethical, a path that they knowingly led themselves down because the documentation for the index that they were creating stated it right in the index. As I've said in this show for a couple of years, Jamie, the reason why the Realtors Association of Hamilton Burlington, one of the largest real estate boards in this country, did not use the benchmark price, did not publish it, did not give CREA access to the data to create it until just 2 years ago, was because back when it was being created, the realtors at that real estate board ethically would not allow it to happen. We warned them beginning in 2011 of how the methodology that they had chosen was not designed to work with how the MLS system operates. They ignored us. They went to listen to the people who had no experience. They went to the people who they could just generate votes from. Those were the people that had nothing to lose. They're the ones that you see on television talking about being housing experts, your local realtors. They don't do enough business that it matters. They're trying to get business. They're so greedy for business, they're willing to go on TV and tell you a story. So let me tell you a story that's about to arrive in 2022. This index was created and launched in early 2012. For the sake of the argument, it was released in January. On the first day that index was launched, the average purchase price at the end of the year for December of 2011 was $360,000. The benchmark price, magically, was $361,000. Then in 2013, 2014, 2015, 2016, every single year, the average purchase price in the year and the benchmark price was virtually identical. Might have been out by $1,000. Virtually identical. Same amount of change, exact same price. Now, what happened during that period was you had a level trading cycle that was taking place. Sales were gradually rising. First they fell until mid-2013 when Polaz was hired, and then Polaz decided to start dropping rates in the fall of 2013. So instead of allowing the housing market to correct, it was already correcting in the summer of 2013. He reversed it. And then he had a trading cycle that continued right on through till December of 2015 that was basically straightforward. It was a straightforward part of the trading cycle. The multiplicity of sales continued at the same consistent growth rate. And at the end of 2015, the average price in Canada was reported by Organized Real Estate as $408,000, but the benchmark price was $429,000. That's a bit of a difference, isn't it? Then a year later, in December of 2016, let me get my numbers right here, folks, the benchmark price had dropped back down to $487,000. It was $2,000 below what the average home buyer was spending in the entire year of 2016. CREA had a problem on their hands. The methodology that they had been warned about was doing the opposite that they had intended it to do. In other words, what we warned them about was actually happening. They didn't get as much house price gain in the benchmark that they did in the average price. Now, our warning wasn't on that. Our warning is what has happened in the last 3 and 4 years here. So remember, folks, what I'm telling you right now. In December of 2016, there was only a $2,000 difference between the benchmark price for Canada and the average purchase price at the end of the year in 2016. Here we are today, folks. This year, the Canadian real estate's benchmark price will end the year $100,000 higher than what the average purchase price, selling price of a home will be this year. At the end of the year, right now, Korea is on pace to report that the average price is going to be around $689,000, but the benchmark price is set to hit $785,000. A $100,000 difference. A $100,000 gain just from 17, 18, 19, 20, 21. In 5 years, the last 5 years that this index has been in place, the benchmark price has inflated $100,000 more than what the average price has increased. What price do you hear reported all the time, folks, now? It's the benchmark price, isn't it? Most of your listeners would be surprised to hear, Jim, especially Jamie, that $150,000 increase that has taken place with Korea's benchmark price since December of 2020 through till today is all fabricated, folks. It isn't real. Most Canadians will never have heard. Certainly the 460,000 Canadians, almost 500,000 Canadian families who have purchased a home from the end of March through till the end of November will never have read anywhere that the average home buyer has been spending less all those months. How has the benchmark price increased $150,000 when home buyers are spending no more 8 months later? How is it possible that every single news outlet in this country has reported that house prices are skyrocketing in April, May, June, July, August, September, October, and November, when all of those sales combined are all lower than what people were spending in February and March? How is that possible? Well, you talk to the benchmark price. Because up until December of 2016, the benchmark price in 2012, 13, 14, 15, 16, the first 5 years that benchmark price existed, it 100% equaled the house price change recorded in the average price. It has only been in the last 5 years where it is now $100,000 out of line with what the average home buyer is spending. Not once has the Canadian Real Estate Association come out and exposed this. Not once have you heard a major Canadian bank expose this. CMHC has remained silent or oblivious or ignorant to this fact. What I'm saying is something anybody can do. When Canadian Real Estate Association on January the 15th releases the average price for Canada in 2021, it is going to be $100,000 below what the benchmark price is going to be recording on the Korea Stats webpage, which every Canadian can go see. It's called the HBI tool. It is the greatest financial con in history. Can you imagine, folks, the TSX, which we hear every single daily, updates every single day. It works perfectly until December of 2016. Then all of a sudden the stockbrokers say, hey, wait a second. We want to inflate it 25% over what it is today over the next 5 years. We're not going to tell the public that that's what's going on, but we're actually going to do this. And you know something? We are so arrogant. We know that the public will never see this. We know that your local realtors are going to be clueless because they weren't involved. Haven't been around long enough to understand how an MLS system works, or they didn't fight against the benchmark price in the first place. Folks, in December of 2016, the average selling price and the MLS benchmark price were identical. A short less than 30 days from now, when they report on January the 15th, there is going to be a $100,000 $100,000 spread. Now, when you look out there, you say, but Ross, I can see house prices going up in my neighborhood. Okay, well, if that was true, then how in the last 8 months have Canadian home buyers, on average, spent less money than they did in February and March of this year? And if you take February, March, and April, and you compare that to May, June, July, August, September, October, November, December, all of those sales, all of those months, 3/4 of a year, house prices have been falling, but they didn't tell you. While actual home buyers, on average, are spending less money, the benchmark price is skyrocketing, and everybody is clueless. Can you imagine what's going to happen to the Canadian Real Estate Association when the government, specifically maybe Christina Freeland, Minister of Finance, Justin Trudeau, whose government is being pulverized because of house prices getting out of line, realizes that the Canadian Real Estate Association itself is to blame for house prices? Because you can be sure, folks, that when Ms. Freeland released her report last week, the budget update, when Tiff Macklin released his Bank of Canada update on rate decision, when your local provincial government makes their decisions on taxation for next year, not one of those people understand that home buyers, the housing market has been falling for the last 8 months. Home buyers are spending less money, but the benchmark price has just shown the opposite. There is no way for them to extract themselves from this unless government allows them to do so. These are the charts that are posted today. Again, on January 15th, the Canadian Real Estate Association is going to announce that the average selling price in Canada in 2021 was around $689,000, and at the same time, the benchmark price is $100,000 more than that. When back in 2016, December of 2016, they were identical. They were identical in 2012, 13, 14, 15, 16, and then the magic started happening. And you know why it started happening, folks? Because of 2017. They weren't getting the result that they wanted from the benchmark price. Their members were starting to see fewer sales. So the methodology in how they communicated changed. How they got an extra $100,000 of gain above and beyond what the average selling price increased over those 5 years, I have no idea, because the methodology doesn't allow it. But you can imagine what would happen to the Canadian Real Estate Association if Pierre Poilievre was lucky enough to be able to call them up in front of the House Finance Committee and put these questions to it. How was the benchmark price and the average selling price identical in 2012, 13, 14, 15, and 16? And all of a sudden, in 2017, it started to diverge until a point where we are today, where we end 2021 with a $100,000 increase. You want to know how big this housing bubble is, folks? That's $100,000 just because of the Korea benchmark price. If this housing correction had started in 2016, the benchmark price was okay. You're starting from just the average purchase price. Now, there's an extra $100,000 spread. There's no recovering, folks. Did house prices jump $150,000 in 2021? No, they didn't. In the last 8 months, home buyers have been spending less than they did in February and March of this year. If you want to go ahead and aggregate January in, it's a marginal increase. But you never include January in the next year's sales because January is a first-time buyer's month. That's why your average price is lower in January. And if you're not measuring the first-time buyer's share of the market, you have no idea how big of the gain is going to be a couple of months later. That's irrelevant to this discussion. Since April of 2021, all 500,000 home buyers who bought a home with a realtor spent on average less than what the 160,000 or 130,000 who bought in February and March spent. House prices haven't gone up, folks. They've dropped. You've just been conned.
We'll have more with Ross Kay right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, Ariel asks, will the resurgence of COVID be the final nail in Canada's housing market, or will 2022 just keep going like the last 2 years with cheap mortgages driving the market?
Good question, Ariel. I will tell you, listen to the previous section if you're just tuning in now, because you need to hear what it says about the benchmark price. Because if they made the benchmark price increase an extra $100,000, you can be sure they're going to try to increase the spread more. So they're going to try to do that to try to convince you that prices are rising when prices are actually falling. I don't care if you see these one-offs, Ariel, in the where you see somebody bought a house that was listed for $800,000 and they paid $1.2 million for it. I don't care about those. Okay, those are outliers. Anybody who says they haven't seen those before simply hasn't been around long enough. I can tell you, Ariel, there's a house at the front of the Millcroft subdivision, which was Mattamy premier subdivision, the subdivision that got Mattamy going. There's the entrance house to that subdivision right here in Burlington. That house increased in price 200% over about a 3-year period, and it crashed. And then another 2 years later, it rose back up again and crashed. This single house. This house was a lesson to anybody who's ever studied housing markets. And if you didn't track the history of that home, you would never know how a housing market works. This current housing market, you have to understand that between March and June of this year, between March and June of 2021, sales increased 100,000 units, 100,000 unit gain, okay? Between that time, June, and today, sales have decreased about 40,000 units. Okay, now this has taken place, that jump with the 100,000. You got to remember that a lot of the builders were putting their houses on the MLS. So if you lived in any small town in this country where you saw rapid house price appreciation over the last year and a half, a lot of that probably has to do with brand new builds being posted on your MLS system, and then out of town buyers moving into your neighborhood and jump buying those brand new builds, which are generally speaking in the top 2 quintiles of your housing stock. So what you're going to see in 2021 will not reflect 2022 at all. It's going to be just the opposite. I mean, what realtors are cheering in the stands right now today is because the market crested in June. In other words, when those sales hit in March and April, okay, when those sales hit in March and April, I think March peaked at 717,000. April was around, I don't know, 196, something like that, nationally, the national price. When those two prices hit, you had a huge amount of a huge number of sales that were being reported right there because they were at peak multiplicity of sales. A lot of your buyers, the vast majority of your buyers, were trade-up buyers. First-time buyers' share of the market was at its lowest. Well, we've just gone through another period here where we saw over a few months about a $60,000 change in average purchase price in a month. Well, to someone who studies housing markets, what that tells you is that there were first-time buyers, a few first-time buyers, even though sales were declining, first-time buyers' share of sales jumped a little bit in July and August, which is why you had higher prices being recorded in November and October, November, and probably December than normally you would see because the trading cycle's off balance. But going into next year, it's back to its natural balance. Now, I also want to tell your listeners that, because this is really the greatest scam about house price. In a declining market where sales are being shed every single month, prices are declining. So as prices are declining, fewer and fewer sales are taking place. As fewer sales are taking place, it means the sales from earlier in the year, when prices are higher, will command a higher share of the entire year. So where this year the market didn't roll over till June, you will have a continual declining year throughout 2022. That means real estate agents will continue to use year-over-year comparison instead of quarter by quarter, or month by month. Month by month is a confusing housing market metric anyway. super high degree of expertise has to be held to understand what's happening in a single month. Quarters, not too bad. You can kind of understand quarters. So you're not going to see, as prices decline, that on January the 1st, 2023, the true amount of house price declines will be reported because sales were busier at the start of the year and because it's a declining market. So you have to understand that's what we're going into. The good thing right now is that as we're entering, soon to enter January, is that we're probably only going to shed somewhere around 50,000 sales by that time. It's possible that we're going to go down $45,000 off that June peak. That means the plummet that's going to happen is going to be massive, and it should be pretty obvious. I also think that, Ariel, what you have to take into consideration is that I don't know how they're going to raise interest rates, because when they raise interest rates, it's only going to worsen the house price decline, housing market decline. As they drop interest rates, as they want to raise interest rates, the economy will slow, and you're going to hear recession being talked about. Whether they try to attribute that this time to COVID, who knows? They probably will, because they're incompetent in terms of how they see things. Now, when I use the word incompetent or arrogance, please understand what I'm saying is that you don't know what you're talking about. Keep your mouth shut, because there are families who will make decisions on what your words say. They're going to trust that you're not able to mislead them, and they're going to, rationally act upon it. I mean, you're not going to hear, you haven't heard anywhere that the benchmark price has increased $100,000 extra above and beyond the average selling price since December of 2016. You're not going to read that anywhere. You're only going to read that if a home buying report gets issued at the start of 2022. If we decide to release a home buyer's report, that would be the first home buyer's report in the history of North America. If we did that, that would be the end of Korea as you know it. So we'll have to wait and see if that gets released or not. What I do know is this. I know that we right now are probably going to end our regular monthly memberships for new homeowners. So our existing members that are already in the programs, or who are already just our regular members, they will be able to continue on as is. But what we probably are going to end just regular folks who want to track the housing market. We're going to put all of our focus into our programs, because our programs are where we know that we can have an influence on people's lives. We are planning a massive change for 2022 to accommodate that. We wouldn't be doing that if we didn't see a road ahead that allows us an opportunity to be seen as experts in the housing market.
Ross, maybe you should call up Mike Holmes on this one. We have a question about roofing. Our listener writes, shingles need to be replaced on my 21-year-old house in Kenora, Ontario. It has 6 valleys. What type of roof is the most practical? One with metal, shingles, composite, or whatever. The pitch is steep enough to use metal. I'm 61 years young and plan on keeping the house another 10 years or longer. The house is well insulated. So what's the most cost-efficient way to go?
Well, you gave a pretty thorough example there, Jim. And this would be the difference between Mike Holmes and a home ownership advisor, okay? So Mike is going to sell you something to make his money. Now, I believe he's going to tell you the truth. I mean, you're picking Mike Holmes. I think the guy's got a reputation as telling you the truth. He's probably also going to tell you the most expensive thing that's out there. We have no skin in the game. We are able to give 100% unbiased information. So when a question like this comes forward, this is where we have a tremendous amount of value outside the buying and selling process of your house. So you said your house is 21 years old. Did the guy guess he didn't give us his name?
He didn't give us a name. He said he's 61. So look for a 61-year-old guy in Kenora.
Kenora, there you go. So you said your house is 21 years old. So arguably you may be on your second roof, but you probably are still on your first. Kenora, Ontario. Where is Kenora geographically speaking? Basically the same as northern Minnesota. Okay. So northern Minnesota, you have a lot of solar potential in your house. So Kenora, I'm pretty sure, is a solid solar potential neighborhood. But you're 61. Okay, so it's 61, and then you said you're hoping to keep your house another 10 years or longer. Well, what I'll tell you is, you're probably going to last at least another 20 years in this house because of health technology that's coming along over the next 10 years. You're already 61, so I'm assuming you're in good health if you're talking about putting a roof on. And I think you better start planning on a 20-year life in that house. You said the house is well insulated. Okay, so your definition of well insulated is probably different than ours, because ours goes like this. In the winter, at 10 o'clock at night, turn off your furnace. Turn it off. Get your heat up to about 70 degrees in the house, and then shut the furnace off. And then at 6 o'clock the next morning, when you're cold, wake up and check the thermostat. Now, a well-insulated house should have lost no more than 10% of its heat by that period of time. That's it. You should only have a well-insulated house, by our definition, would have lost only about 10% of the heat. If it's more than that, let's say it's between 80 to 90%, most people would say that's a well-insulated house. We wouldn't. You said you have 6 valleys on your roof. 6 valleys. Okay, so I already know that your house is a leaker, okay, because of the design of the roof. If there are 6 valleys, no matter how good your builder was or how good you were in sealing up that roof, there is going to be leakage in those valleys. The reason you probably mention the valleys is because you probably have suffered from ice buildup in those areas. So these are all the sort of things that we take into consideration. 20 years, there is no reason that you're not talking about putting solar on your roof, okay? Because I'll tell you, within 5 years from now, you're going to want solar at home, okay? Even in Kenora, your next vehicle will probably be an EV. So you want to power that off your roof at all possible. So that is something you should be thinking about before you get to what type of roofing membrane that you want to put on your house. I've always been a fan of metal because you put it on once and you don't have to do it for the rest of the time that you own your house. A good metal roof install today with the modern metal roofing technology means that you really don't have to replace your roof again. It can go through, it suffer tremendous amount of hail. It's color lasts now. You don't have to worry about it fading. The new metal roofs that they have out today, if you get the right ones, are fantastic. Now, if you're going to only be in the house 10 years, then I would probably tell you just go ahead and put an asphalt shingle back on. Make sure you have a good water layer under the roof and like water protection layer, and maybe just go ahead and put asphalt shingles on, because at 10 years you're only going to be about into, say, 60% of their life will be used up, but the new owner will still have 40% left. I would also tell you, when you're doing a roof, if you look at a 20-year window, then you probably want to be thinking about insulating over top of your roof before you apply your new roofing material. You may want to put a layer of styrofoam, foam insulation on your roof, because you have to remember, every dollar that you're spending today on a roof upgrade is only 3% mortgage money. So your cost is very, very low. So you can look at a 20-year payback period, and you still could be living in the house. So when you talk about the cost-efficient way to look at this, we look at it differently than you would. You look at your cost efficiency as of today, where we look at over the remaining lifespan that you're going to have in that home. Okay? We also look at it where you're going to be when you exit the home. Odds are, let's say you exit at 81, the importance of the amount of wealth that you're building would not be the same as if you were going to exit this home right now at 60 and trade up to a fancier, more expensive home, maybe a bigger property. Maybe you want to build a brand new home. That would be a totally different discussion. So the cost-efficient way varies from owner to owner. The roof that you should select varies from owner to owner. It varies from house to house, geographical area to geographical area. It depends on the age of the house, what angle the roof is at. All of those things need to be taken into consideration. The choice of your roofing material is very, very simple when you have all those other answers in place. But until you have those answers in place, answering that question would be false, misleading, and deceptive. So I can't answer the question that way. What I'll tell you is, you sound like you're very much engaged within your home. The way that you've portrayed your situation seems very straightforward. And I think if you take the answer that we've given so far in this question, to your question here, and you do some further research in making your own determinations of what's right for you, then all you're going to be left with is selecting a roofing material and which roofer is going to install it, because I'm assuming on a Six Valley roof you're not going to be installing it yourself, in your local area that you can trust. And that is a very specific thing to the local community that you're in. You should get all those other answers first, though, okay? You should get all those other answers first. So the only thing you have to decide is, in the end, when you're choosing a roofing material, are all those other issues dealt with? Do they need to be dealt with? Because right now, at a 21-year-old house, assuming it's the original roof, this is the time to deal with it. You're only going to have to do this once. Do it right, as Mike Holmes would say, I guess. I said, but in terms of cost, look at the cost over your remaining lifespan in that house. Look at it over 20 years. Look at your where you're living. You're probably burning oil. Okay, so Kenora, I'm assuming Kenora is oil or electricity. Okay, both of those two energy sources, especially if it's oil, is going to cost substantially more with each passing year. Carbon taxes are going to ensure that happens. So the extra, say you have to spend an extra $4,000 insulating the roof, you may save that amount of money in heating oil and tax charges, carbon taxes, over the next 7 years. I think that's way more efficient than just doing it the regular way and dealing with whatever consequence there is on your heating oil source. You really need to, these questions are very simple in terms of working through, but the understanding to answer the question, like what questions need to be posed to you to generate, so you can generate the right answer yourself, are complex. You know, when you study thousands and thousands of owners over decades and decades and decades, you gain this kind of information from them. We don't have this, we didn't create this intelligence ourselves. It's all the people that we studied over these years that generated this information for us. We're just lucky enough to have tracked it and recorded it. And, we have a large base of people that we can reach out to and get, answers. Unfortunately, Kenora, we don't have any current members in Kenora. So, my reference point has to be as an overall one in the context of where you're living and the way that you framed your question. But thanks for posting it.
Ross, thank you so much for chatting with us, and have the best Christmas ever.
And you too, Jim. All the best to everybody that's listening. Happy New Year as well.
My guest has been home ownership consultant Ross Kay from the wealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Happy holidays.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.